So Affirm is set to release their earnings on February 10th after the market close. Let's hope so that they follow through because Peloton really screwed me up on that one. It's a funny story I'm going to tell you in a different video. But in Affirm's language, this is their second quarter 2022 results because they follow a different financial year. Okay, so Affirm has been on my radar for a very long time, not because of the company or the stock, but Affirm entered an industry which none of us knew about just a few years ago. And like any new industries, let it be smartphone or electric cars, any company who has created the industry has done well in the long term. Now, I know it's a different industry, and no, I'm not comparing Apple or Tesla to Affirm. What I'm saying that if a company creates an industry, then it deserves a different treatment, in my opinion. Matter of fact, Morgan Stanley came out yesterday and gave Affirm a $140 price target because they see estimates will likely go up throughout the year, and why not? Look, they have several sources for upside for December quarter and for remaining 2022 from the Amazon and Shop partnerships. And also because of features like product debit plus card that they recently launched, an expansion of the credit box and Affirm's ability to drive engagement and user adoption on its platform. Not sure if you know this, but if you go to affirm.com, you can actually see products listed on their website. So they're slowly getting into that shop hub instead of just a service. Now, I have been watching Affirm stock for a very long time, and as I mentioned before, as a company as well. But I invested in Affirm in September of 2021 when Amazon partnered with Affirm because that was the moment when I felt that Affirm is going to grow at a massive scale. And we saw the growth from $80 a share when the partnership was announced to $150 a share, and now back to $60 a share. All this without any revenue from a major partnership like Amazon or Shop. You cannot blame Affirm or any one company. The whole market has turned over for these fintechs, and especially for fintechs who are still running on loss. Some also blame and make fun of the industry is buy now, pay never. I'm sure same thing was said for credit cards when they first came out back in the day. So when more scrutiny comes for Affirm or came for Affirm and the whole BNPL industry, which is buy now, pay later industry, I actually got more excited because this was the time to get serious and actually sort the bad guys out from the industry. So in this video, I'll discuss my Q2 2022 results for Affirm, and I will also share my Affirm holding and also what I plan on doing with them. As a gentle reminder, please hit the like button and consider subscribing. And we also have a Discord where our amazing members talk about stocks, investing, trade alerts, and much more. Okay, so let's get started and let me show you what I expect Affirm to do in Q2 or 2022, which is December quarter for Affirm. Okay, so the top image, which is kind of a blurry for a reason. I'm not allowed to share this, but this right here, yes, you see revenue on top right here. So the consensus revenue for 2022 estimate, which is going to be ending in June of 2022, is about $1.2 billion. Just a year before, it was about $870 million. So you can see it's about 47% growth in 1 year, which is an amazing growth given the market condition. And this estimated revenue is actually given the current market condition. This was higher just, I would say, a few months before. So definitely things have changed for industries like Affirm, and I'm going to cover that more in detail. But let's take a look at what analysts are expecting for Affirm to come out for their December quarter. So the revenue, they're expecting about $332.50 million for the December quarter, and the guidance from Affirm is about $325 million. So definitely more than the guidance. The consensus is that they are going to deliver a better revenue than the guidance. And then the low estimate is about $308 million, and high estimate is about $355 million. Now look at this. The gross merchandise value, or GMV, is a very important metric for companies like Affirm. So they are saying that they are going to be coming out with about 3,700 or 3.7 billion for gross merchandise value, while the higher end is about 3.7 billion. Now, if Affirm comes out and delivers this number, then it's going to be an amazing beat on the earnings. Next, let's take a look over here. So operating income is still, Affirm is running on loss. They're growing like crazy. And when a company grows like crazy, you expect these kind of numbers. Okay, so the low estimate is about 158.20 and the high estimate is about 58.64. We are estimating, or consensus is saying that about 110.34 for operating income and net income of about $100 million loss. Now, if they come out with less than $100 million loss, in my opinion, that's a very good sign for Affirm going forward. Because remember, Amazon partnership didn't take effect much till December end or maybe January. I mean, I don't think they have much number from the Amazon in this earnings that they're going to report. It's going to be the guidance that they're going to have for the next year of 2022. And then there are a few other items. Transaction per revenue 2.43, the low estimate is about 2.40, and the high estimate is about 2.47. If this comes out to be a higher number, that's very exciting. That means people are spending more per transaction on Affirm, which is of course always a better thing for these fintechs because they are generating more revenue from the existing customer base. So this overall, I think, is a very strong consensus report for the December quarter for Affirm. And as I said in my previous videos, that it's not about what the company did in the previous quarter, is what is their guidance for the coming months and for the coming year, which I think they are going to give a very strong guidance for 2022. So this is what we expect in the coming days from Affirm. Now let's take a look at what Affirm has done historically. So here's a graph right now that what Affirm has done up until now, and this is the expectation for this time. And we are looking at about 18% of the stock to go up and down after the earnings. It could be plus, it could be minus, 18% change in the stock price. In my opinion, we are sitting at a very attractive price point for Affirm. Again, I'm going to explain in just 1 second. But take a look over here. So this was in November when the earnings came out. The stock before was 133, the stock after was 151.83, gained about 13.7%. Then on September, we had stock 92.06, and then after the earnings came out 123.70 because of the partnership from Amazon, as I mentioned, and a huge guidance that they gave, and the stock went up almost 34.37%. Before the two times, the stock went down 10% and 2%. So of course, gain always overshadowed the losses after the earnings came out for Affirm, and we know what happened with the stock lately. It dropped like crazy because of all the market conditions that we have right now. So this is consensus rating right now. We have about 20 analysts that are covering Affirm. So 55% are saying it's a buy, and then we have about hold of 38.9%, 7 analysts are saying hold, and 1 analyst is saying sell. The 12-month price target on Affirm is about $101.73. Last price was about $65.25 when I took this screenshot, and we are looking at about return potential of 55.9% in the next 12 months. This is next 12 months. So now let's talk about the industry. So here's what I feel. The industry should be and will be heavily regulated. We are going to see all sorts of regulation in BNPL for both consumers and companies, which will be wonderful for companies like Affirm. Look, just about a month ago, Experian launched world's first BNPL bureau to track defaults. Right here, Experian launches world's first BNPL bureau. This is huge, as this will help the industry get rid of the bad actors. I will tell you what I feel about the future of Affirm, but before, let me share what I hold. So this is my current holding of Affirm. I had about 1,100 shares. I sold 200 shares to raise some capital to buy some Tesla, and now I have about 900 shares right here. I have about 5 April 2022 $80 calls that I hold right now, and I'm losing about 57% on those calls, and I'm losing about 37.27% on Affirm shares. My buy price was $104 right here, as you can see. So I feel very, very strong that we are going to see a beat in the earnings, and we are going to see a very good, I would say, the future or this coming year of 2022, where Affirm price is going to or should go up. Again, no one can guarantee, nobody has a crystal ball. These market conditions are funny. Look what happened with Peloton. Nobody expected Peloton to jump like this, but when they came out and said we are laying off 200 or 2,800 people, everyone got excited. We are changing the CEO, everyone got excited, and now Peloton is doing almost 30% up, which is wow, amazing news on or for Peloton. I got rid of Peloton. Okay, so there are few things that has changed for BNPL. This was never a 10-year hold for me personally, because this is an industry which may not survive that long given the shift in consumer behavior. But the recent changes in the socioeconomic temperature, where the spending has cooled off, inflation has skyrocketed, and people have so much more savings, I feel like companies like Affirm will have limited growth. They will definitely grow. They will definitely have a very strong 2022. But my expectation just 3 months ago have changed on these industries like Affirm and also a few other fintechs. I still think they will come out with a strong 2022 or 23 guidance, but it won't be the same, as I said, as I expected just a few months ago. So my plan is this. I will liquidate half of my shares when we hit about 100 to 110 price target, and remaining when we cross 120 to 140 price point. I will start selling covered calls once we hit the $80 mark, as I will try and reduce my net cost by selling covered calls. So anytime you sell covered calls on your holding, you are actually reducing the net cost or the cost that you paid for the share. And that have been my plan on any stock right now, which is a growth stock, which is not making money, because my plan is that I need to reduce my net cost. So for Affirm, my net cost is about $104. I want to bring that cost to about $90. So when I liquidate Affirms at $110, I'm gaining some, I would say, I'm making some money over there. And then the remaining, I would do it at around 120 to 140 range when the stock hits, because I feel at that point it's going to hit that ceiling again where it can come down briefly and I will buy back in again. This is a trade for me. This is not a long-term investment. I plan to be on it for next 2 to 3 years when the industry evolve and revolve. And of course, like anything else, the industry can change for better or for worse. And then we as investors need to change for better or worse along with the industry. So if content like this is something that you're interested in, then consider subscribing and hit the like button so we can reach out to more investors. And for more one-on-one conversations, consider joining our Discord and Patreon. Links are in the description below. As always, a pleasure to share all of this with you. Until next time, you all have a sparkling day.